What we don't like is that this is a cyclical asset described and modeled in secular terms with an M&A machine that obfuscates underlying growth, a business model of M&A which for which the valuation metrics don't necessarily incorporate the cost of doing the deals, and a machine in which you can basically, thanks to M&A, appear for a short time to exhibit control over your own destiny, which we think creates actually quite a bit of illusory risk, which is probably the reason why the sentiment around the stock is so one-sided in terms of sell-side ratings and in terms of risk positioning, in terms of short interest on the stock. When I look at this, I don't see low-quality assets, right? I'm not trying to say that there's some kind of really crappy element here. Broadcom's done a very good job of putting together a number of really good, high-yielding, high free cash flow assets, good brand names, strong franchises, for sure. But a lot of them don't have great growth rates on the forward basis. The stock is owned almost in a riskless manner from the sell side for sure, and from the buy side, half the risk profile from a TI, which we think is a much better asset, at least from an organic perspective. As we roll forward organically, I think we're going to see some pressure on the growth rate for the top line on this company, which is obviously going to change everybody's view of how to value the free cash flow elements, because free cash flow is a function of how you value your free cash flow yield, or EV free cash flow is obviously a factor of organic revenue growth on a go-forward basis. We can see also some areas of gospel where people have just sort of taken this riskless profile and taken management words and sort of modeled it forward. And in the wireless area, where we see that there's a brewing problem in this category. And then the last part, I guess, is like the cycle, the semi-cycle, where we pointed out part of that when we talked about the change in sell-through for Broadcom Classic in their wired division, going from sell-through to sell-in from a distribution perspective, and maybe that contributing to some of the excess revenue in the last couple of quarters for standalone Broadcom. When does the cycle play out? I mean, as awesome as this management team is, that's not something that they can tell you in advance, right? They didn't, during the 5 quarters where they were clearly overshipping to Apple for the RF front-end business, they didn't know they were overshipping, and they didn't tell you how steep the decline was in the 2 quarters, 3 quarters that came from the December period last year into the early part of 2016. And of course, they acquired Broadcom during that period of time, so a lot of this was obfuscated, but it was a massive decline of revenue from the run rate from fiscal 15 into the beginning of fiscal 16.